Conservatism concept. Conservatism's concept says provide for all future losses, recognize incomes only when realized. Recognize incomes only when actually realized. That is why our closing stock, closing inventories, there is a basic principle which says that closing stock should be valued. What is the value of a closing stock? At cost or realizable value, whichever is lower. Stock is valued at cost or realizable value, whichever is lower. Why is closing stock valued at cost or realizable value, whichever is lower? Let us understand. Suppose we have an item with a cost of 100 and a sale value of 150. If this item, I know I can sell this item tomorrow for 150 rupees, but I have not yet sold it today. And if I show it at 150, it would mean that this profit of 50, this difference, this profit of 50 is being recognized in the current year. Though I know for a certainty that it is going to be sold next year, I cannot recognize this income in the current year. But suppose this I said was the cost and this is the selling price. Suppose the cost is 100 and the selling price for some reason has fallen to 90 rupees. Then this closing stock is valued at only 90 rupees because I know that tomorrow when I sell this stock, I will make a loss of 10 rupees. So I make a provision for this loss immediately. Similarly, if I have sold goods on credit to a person and I expect him to default, and I've seen indicators, there are some indications that he is not going to pay this money, I have to provide for a bad debt. Thus, a conservatism concept is another basic concept wherein if we expect any losses, we provide for them. But as far as incomes are concerned, even when we expect incomes, expect future profits, we can recognize them only when they are actually realized.